Now, the big highlight for New Zealand markets yesterday was the release of the December quarter employment report. Now, this is the first solid read we get on economic activity over the December quarter, which is why it's so closely watched. And it turned out to be a fairly interesting result. First up, we saw a surprisingly sharp decline in the unemployment rate, which fell from 6.6% to 6.3%. But the decline was very misleading because it was not due to an increase in employment, but rather to a decline in participation, and this meant more people leaving the workforce because they're just discouraged and they can't find jobs. In fact, the finer detail of the report showed that the labour market was quite subdued over the December quarter. Employment barely lifted, but what was more concerning was the sharp drop in hours worked. This reflected more people going from full-time employment to part-time employment. It's not a very encouraging sign, as it does suggest that employment growth in the next quarter could be quite subdued. Overall, it's a fairly disappointing result, and it does add to a run of weaker New Zealand data that we've seen recently, and just highlights the case for the RBNZ to keep the official cash rate on hold until the end of the year. Now, there was quite a lot of developments overnight, but the key focus was the announcement that the Greeks have finally come to some sort of agreement. Now, what the Greek politicians have agreed on are some various austerity measures, and this is in exchange for the second international bailout. This should prevent the Greeks from defaulting and causing a bit of a mess in the Eurozone. It is seen as a fairly positive step in helping stabilise sentiment, and we did see markets react positively to the announcement overnight. Now, as a result of what we've seen over the past 24 hours, it's been fairly mixed for the New Zealand dollar. New Zealand dollar did start out on the back foot yesterday. This was following on from the weaker New Zealand employment report, but also some headlines from offshore suggesting that the Greeks were struggling to come to this agreement. But however, it did transpire that the Greeks have reached an agreement, and this was positive for markets and saw the New Zealand dollar recover some ground. Now, in this current low volatility environment, the New Zealand dollar is likely to continue to grind higher. But we have said previously, the fundamentals aren't supporting the New Zealand dollar at these current levels, and over the coming months we do expect to see some correction at some point.